Good afternoon. This is Rick Baker with Coldwell Banker. I was giving you the update for Thursday, May 4th on the real estate market and the interest rates, most importantly. Now, a lot of people saw the news yesterday that said the Fed had raised the funds rate another quarter of a point. And a lot of people reacted negatively to that. And frankly, they're just uninformed. The Fed fund rate does not directly drive mortgage rates. What the mortgage rates react to is inflation. Now, what actually happened yesterday is when the Fed raised that a quarter of a point, yesterday mortgage rates dropped 0.42% yesterday. This morning they dropped another 0.36. So in other words, in less than 24 hours, we've lost 3.75 of an interest rate. What happens is if there's high inflation, that makes the mortgage rates go higher. What the market is believing is that this latest and hopefully last interest rate hike will be enough to tame inflation, which is just decimating America's economy. But if that is the case, we will start to see interest rates drift lower. Now, next Wednesday on the 10th, there's a consumer price index report that's due. And if that comes out as expected, where inflation is starting to taper off, you'll see rates go even lower. And frankly, I think now an FHA or a conventional, you're going to be in the low sixes. Next week, if the Fed, the inflation report comes in low, then what we could do is we could start to see interest rates in the fives. Frankly, what will happen at that point in time is you're going to go back to spring of last year, very strong economy, very strong real estate sales, and bidding wars, because we would have knocked off 1% off the interest rate in a little under a week. So that's the facts. I mean, frankly, and anyone that wants this, I'll send you the report. We are having the same number of showings today that we did for May of last year. And nobody says May of last year was a bad month. All right. It wasn't like February and March where houses were selling in 2 hours, but it was incredibly strong. And we're going to see an incredibly strong summer this year as well, because the underlying economics of Dallas still remain the same. Great economy, very well run state, low tax burden, and plenty of jobs moving here. So that's the report, and the economics of that don't change. So frankly, buy yourself another house, move out of the house you're in, rent out the current one. I'll show you how to do it. And, we'll put your kids through Harvard. Please give me a call if you have questions. 972-836-8880. Thank you.